Hello, my name's Simon Groom and I'm Director of Exam Training at Practical Guidance here at Tolley. One of the products we have in our suite at Tolley is TolleyGuidance, which is our practical guidance product which helps practitioners with their day-to-day work. Now that January is out the way and the tax returns are hopefully all filed, our thoughts naturally turn to tax planning or year-end tax planning. Now, the basics of year-end tax planning are fairly well known to all of us, but what we thought we'd do today is just pick up on a couple of items that might have slipped under the radar or might be there for the first time this year that we need to consider. Now, with me today is Ben Saunders, who's a tax manager at Tolley.
Hello, Simon.
What's of interest to you this year, Ben?
Well, I think this year is quite unique in that we've got the child benefit charge coming in for in full for the first time. So in 2012-13 we had 3 months of the high income child benefit charge,
that's right.
And this year we're going to see people planning around it. So what we have is a high marginal rate of tax between £50,000 and £60,000 where an individual and their spouse, their entitlement to child benefit is withdrawn through the tax system. So you can see quite incredibly high marginal rates there, given that you only have £10,000 to withdraw what is at least £1,000 plus.
And I suppose it depends on the number of children. Yeah,
that's right. So you start with sort of £1,000 for one child. I think it's £1,700 for two children, and it progresses like that. So where you've got 1,000, it's 10%. 1,700, 17%, you know.
I suppose if you're between 50 and 60,000, then obviously paying your pension contributions.
Yes, you'll be looking at standard tax planning ideas like paying pension contributions to bring your income down beneath 50,000. You might be considering charitable contributions as well. One of the issues with pension contributions is that we've had a reduction in the lifetime allowance to 1.25 million, and the annual allowance is now £40,000. So if you're paying above that, you might find that you're getting another tax charge attached to those contributions. So you've got to be really careful.
Yeah, and I guess that's, I mean, the pensions is a whole different subject. That's something for another time maybe. But so what if I'm above 60,000 this year, and you know my child benefit is all gone?
Well, I think it depends on your circumstances, but where you have a degree of control over your income. So if you have a company, is a prime example, and you have enough profits to pay out dividends, now might be a good time to do it, because if you're thinking that those might be subject to tax at the higher rate anyway, by paying above 60,000 and obviously not going above 100,000 where you've got the personal allowance abatement point, where you have another high marginal rate of tax, you can perhaps keep income under £50,000 for the next 2 years, say.
Okay, so if you're taking out more this year, you're accelerating tax charge, but you're saving yourself being caught in future years. So
that's right.
I suppose what we're looking at is tax planning almost over a number of years.
I think that's one of the things which these marginal rates, such as we have with child benefit charge and personal allowance abatement, creates. You have to take a slightly longer view to try and avoid those bans whenever possible. But if you do go through them, make the most of it and at least go up to the next threshold if you're going to be taxed at that rate anyway.
That's quite interesting, because it's perhaps a little counterintuitive. But I suppose, I mean, the only thing we've got to watch is if you're planning for a number of years ahead, the tax system changes, and particularly speculation around the additional rate, which, you know,
currently
could be 50%, could be 40%.
Well, that's the thing. The second you start taking a long-term view with tax, you start having to consider what tax policy is going to be, and then you have to start considering who's going to be in charge of tax policy. So there's a lot of risks attached to it, but if you don't consider those risks, you can't make the most of the opportunities that are there.
Actually, thanks, Ben, for that. That's very interesting. There's a number of things for people to think about. So, I mean, we've identified the child benefit, which I think has been wildly trailed, but I thought your take on perhaps taking over a number of years, was a very interesting one. And of course, partnerships, which clearly is critical that people have got to do something about over the next month. So if you'd like to find out more information about the topics that we've been talking about, you can click on the link at the end of this video and we'll be able to send you some information. But in the meantime, I hope you've enjoyed the video. Thank you very much and goodbye.